Good afternoon and welcome to Frontline, where today we'll discuss the 2022 national budget. With me is Charles de Wet, Executive at ENS Africa, Lamise Omarjee and Carol Payton, both colleagues from News 24. Thank you for joining me to discuss what seems to me quite an important budget, potentially perhaps a bit of a turning point. It was a budget that included the largest ever tax take in South Africa's history, a cool 1.5 trillion rand, which is of course thanks in part to booming mining profits. This has helped to change South Africa's dangerous debt trajectory, but the larger fiscal picture still looks quite ominous, with South Africa owing more than 4 trillion rand. On average, 20 cents of every rand collected in tax is now being spent on debt repayments. So these are the realities that Finance Minister Enoch Godongwana had to contend with in his maiden budget this week. Let's start the discussion today by highlighting some of the more surprising aspects of the budget. Lamise, let me start with you. Anything that stood out to you?
Well, I guess we already knew the 350 Rand social grant would be extended, but there was one line that stood out to me in the document, and it was that nearly half of the population receives a social grant. And I think that maybe put the whole thing into perspective. I think it's easy to distance yourself from issues like poverty, inequality, and unemployment. But this sort of gave a visual picture, that possibly if you're in a room full of people, 1 in 2 of you could be dependent on a social grant.
Great. Thanks, Lamise. Carol, any surprises?
Not really surprises. I think that the fact that very little, well, nothing was said about the public sector wage bill and how it's going to unfold was a surprise, because we all know that that is the biggest risk, that has been the biggest risk, and that is what has put public finances into such deep trouble. So in the budget, the minister just assumed, well, we had the cash gratuity that public servants got last year, and then they're getting it again this year. But for next year, he put in absolutely no wage growth. Now, that's not realistic, and he didn't even really make allowance for it in other places. So that was a bit of a surprise. As Lamise says, yes, we knew the SRD grant was going to be extended, but again, everybody wants to know, well, what happens after the 12 months? So I think that there were lots of gaps that were left open, and I think that surprised me, because Treasury is normally very prudent.
Charles, anything you didn't see coming?
From a tax perspective, the biggest surprise was how generous he was to the man in the street. So, the fact that there was literally no increase in the fuel levy and the road accident fund. I understand that it's difficult at the moment with what's happening between Russia and Ukraine, and that could have a big impact on the inflation rate. All the fuel price that will impact on the inflation rate that could impact on people. But I think it's the first time since 1990 that there's been no increase, and typically it's almost an invisible tax that people have come to expect. And you have to wonder whether, if there was a small increase there, whether that money could not have been well spent in a particular area. And the second aspect was just in terms of the fiscal drag adjustment, which is the inflation adjustment that is done on the tax tables. It was something that it was always a big deal, and in the last few years we've seen that they haven't given the full relief from an inflation perspective. This year they did give the full relief, so sort of 13.5 billion rand that was effectively put back into taxpayers' pockets. And again, you wonder whether there wasn't a way that some of that could have been retained and spent on the places that it needs to be spent.
Any other notable tax changes, Charles?
The other, significant change was, an announcement that impacts on business quite substantially, and that was the reduction in the corporate tax rate from 28% to 27%. That I think was a year earlier than one had expected it to be. It is very much a balancing act because it's being funded by a reduction or at least a delay in some of the expenditure. Around assessed losses that now get carried forward and interest that can't all be deducted in a particular year. So I think that was significant. The other thing that was significant was around the announcement that they will continue to reduce rates. This is something that was muted last year, and from a global perspective, from an investment perspective, we are way higher than we should do. So that was also an important announcement for business, and hopefully will support the growth economy or the growth in the economy that's necessary that the president referred to in SONA.
Just looking at that corporate income tax cuts, government is hoping that it would be pro-growth, encourage more business activity, get companies to hire more people. But realistically, do you think it'll make any difference to growth, or does that just go straight through to the bottom line?
I don't think that it will have a significant impact on growth. I think that if we wanted to support that, he could have given an extra percent, sort of back to my point in terms of how does he balance it in terms of the fuel levy, for example. I think it would have been a very positive message if it had gone down by an extra percent. And I cannot think of a good reason why it has to be funded by a reduction in deductions for taxpayers. So, from a treasury perspective, from a tax collections perspective, they're very much in the same position as they were previously. And I think this is an important enough change. In terms of bringing new business, in terms of getting people to invest in growth and to invest in employment, more could have been done on that front. So unfortunately, I think the excitement of the reduction was last year. Now it's a little bit of a holding pattern. We don't see a big impact in terms of actually achieving the objectives that it wants to.
So how does South Africa's corporate income tax rate compare to its peers? Is there scope? How much scope is there for more reduction?
Well, if you sort of do a comparison globally with our trading partners, our rate should be around 22 or 23%. So there's a big gap that has to be made up. So this is why I think that reduction from 28 to 26 would have been better than a reduction from 28 to 27, because it would have shown the downward trend. If we go 1% per year, it's still going to take 4 or 5 years before we're really comparable to major trading partners. What we saw in some of those jurisdictions was sort of a slight increase because of the COVID pandemic, in terms of the importance of collecting additional tax in the circumstances, but they've all gone back to a lower rate. So from a South African perspective, it's important that we get down there as soon as possible, and there's at least 3%, probably 4%, and maybe even 5%. That the minister can play with. And I think that would have been a real positive message for investment.
So, Carol, the minister said that the tide is turning when it comes to government finances. Do you believe we've now well and truly stepped away from the fiscal cliff, or is South Africa still in danger of a death spiral?
No, I think we're still in the danger zone. And I think the reason for that is the points I was making earlier about the number of uncertainties in the budget. We still don't know really what's going to happen with wages, really what's going to happen with the grant in the future. Well, would they have to raise taxes to do that? What would that do to growth? And it all comes down to South Africa's ability to avoid becoming a debt-distressed country is really about whether it can grow or not. And I think that's another big criticism of the budget, is that there there wasn't really any evidence of a growth strategy. And yes, we're in a really difficult situation right now, but the problem is, unless we get growth going, and the growth forecasts were pretty modest and low, unless we get growth going, we're never really going to get out of that danger zone where interest and debt servicing costs threaten to kind of snowball and overtake us. So as long as we've got, the interest rate much higher than the growth rate, we're going to be in that danger zone.
Yeah, to that point, I mean, the budget did seem to be a bit light on infrastructure. If growth is what we need, it wasn't an overwhelmingly pro-growth budget.
No, I mean, look, obviously, I mean, I think that they are pinning their hopes on these structural reforms, and there is evidence, as the president pointed out in the State of the Nation address, there is evidence that we're making some progress with these structural reforms. By that I mean with the electricity supply industry bringing in more producers, with broadband sort of freeing up more broadband for auction, those sorts of things. And I think that that's absolutely right. And I think that everyone agrees that is where they have to go. The problem really has been is that it takes so long, and so you don't really get the lift off that you need. And meanwhile, that debt burden is still rising. So even though the minister, what he did with his windfall that you were talking about earlier, this 180 billion windfall, he did two things with it. One was that he said, well, I'm going to borrow less in the future. He took about half of it, and 45% of it, and he said, I'm going to borrow less in the future, so we're less on the fiscal cliff. But the other 55%, he said he's going to spend. And I think that's the risk, is that there's still too many spending pressures in the budget. And I sympathize with him because we know that, a lot of the money that the extra spending that he allocated went to provinces and to health and education and those sorts of things. And we know that provincial health and provincial education is under enormous pressure. So, and the system is quite literally falling apart. So he took the steps to do that, but at the same time, it leaves us in the fiscal danger zone.
I mean, the big challenge remains the wage bills. You mentioned provincial health. Almost 80% of provincial health budgets go towards wages. So, I mean, you mentioned it, but how realistic is it to expect that civil servants will accept wage increases of far below inflation in the coming years? And Godongwana also referred to a larger reorganization of the public sector wage bill. He said he's going to engage with Labour. What does that refer to?
So what Godongwana tried to do in the briefing with journalists, he tried to kind of let us into his thinking. And his thinking was pretty much along the lines of like, look, we haven't actually finalized this thing. And in fact, we're not putting numbers into the budget because we really want to have a complete, thoroughgoing revision of how this wage bill works and how public sector wages are structured. So that's his plan, and they've already set a meeting, a 4-day meeting or 3-day meeting or something with unions to kind of thrash that out. So that's his thinking. His thinking was like, I've got to solve this problem once and for all. We can't keep having this problem every single year. That's all good and well, but in the meantime, we do have a situation where public servants, it is built into the structure of the wage that public servants' wages rise above inflation. And that's because every year public servants get an annual increment of 1.5%. So that's just 1.5% for working there. It is, I'm not sure the extent to which it's linked to to performance, but certainly not in any significant way. There you already knew you're not starting at naught when you start with public servants' wages. You're starting at 1.5, and then of course nobody wants to earn less than they earned the year before. So you've got to add CPI onto that. So that is going to be a really hard negotiation. So far, unions have not shown any inclination towards helping out the government with this problem. I mean, their attitude is like, well, who caused this problem in the first place? Who caused the fiscal crisis? Who caused state capture? Who did all of these things? Who landed us in this mess? It wasn't us. It was the politicians who are earning very, very much more than workers. So it's going to be a hard negotiation, a hard one to crack. But I do admire Godongwana's approach to say, let's solve it once and for all.
So he loves using the phrase tough love, Lamise, and he sort of uses it in the context of state-owned enterprises. Again, in his budget speech yesterday, he took a tough stance on SOEs. Did his yesterday signal a shift in the way government deals with SOEs, or is this just posturing?
Yeah, he mentioned the tough love, I think, in the medium-term budget policy statement too. I want to say that I don't think it's just posturing. And in fact, I think he's building on what his predecessor, Tito Mboweni, said, that funding can still be made available. It's not like there's no funding for SOEs, but they're going to have to meet certain conditions. An example of that is with the Land Bank. They had 5 billion set aside for them, but it's subject to conditions, and they haven't been able to access that money until they can meet certain conditions. So I do feel they are sticking to that principle. Interestingly, he noted that SOEs had received 308 billion in bailouts already. So I do think maybe government has reached the point where they're fed up. Hopefully that it isn't just, well, I don't think it's just talk. I do think that they are showing tough love.
And talking of the SOEs, who were the big winners and losers in the budget yesterday?
So it was actually really hard to find who's receiving additional funding. But I think what stood out to me was Sasria. They're actually a SOE that performs well, but they couldn't really meet some of the requirements to pay out the claims from last year's unrest. I think the claims came to 32 billion. That was the extent of the damage. And I don't think any of us were prepared for the scale of the unrest. And so Treasury stepped in to help them last year already. 3.9 billion was provided and a further 11 billion. And then 7 billion has been set aside this year for emergencies, and that comes to 22 billion for Sasria. So again, it's not new money. There have been signals about it. And then Denel, the state defense company, they've been struggling with liquidity issues, unable to pay their staff at regular intervals, that sort of thing. They will receive 3 billion. Part of that is 2.9 billion, which was signaled in the medium-term budget policy statement. I think in terms of SOEs that lost out, SAA is one of them. Fin24 had previously reported that they have a 3.5 billion funding gap linked to their business rescue process, and they had, reached out to Treasury for that. But Treasury didn't budge in this budget. Saying that, Treasury has really helped SA with their business rescue money. They've extended 10.5 billion already. And apart from the business rescue process, they set aside 16.4 billion over the medium term in 2020. And about 1.8 billion of that money is going to be paid out in the upcoming financial year. There's no new allocations for SAA. But interestingly, in today's cabinet statement, it was announced that SA managed to conclude the sale of the majority stake to the Takato consortium. So I guess there's some development or movement there.
Carol, the biggest and the baddest SOE of them all is, of course, Eskom. Did government grapple at all with its debt burden of 400 billion rand?
Well, we got the same feedback which we've had for the last 3 years, which is that we are dealing with the problem and we're looking into it and we'll let you know. So that was the response. I do think Godongwana's got maybe a little bit of a more of a strategy than his predecessors. So he's basically saying, look, Eskom must also do something to help itself. And we know that unremunerated is in there and is making a difference. But there are massive inefficiencies. It's still a very inefficiently run company. And apart from that, Godongwana is saying, well, what any business would do if they were in trouble is they'd sell stuff. And he wants to see them sell stuff. So he's kind of turning the screws. So he's basically said, you've got a year. In a year's time, we'll maybe be ready to talk about the solution. But what are you going to deliver, Eskom? And why don't you sell some things? And why don't you generate yourself some revenue? So it is a kind of step forward. Whether it will yield anything, I don't know, because if Eskom were to, for instance, try and sell its coal-fired power stations, there is the question of who would buy them and who would finance such deals, with coal becoming really unfinanceable. And then if they was to sell other things like their transmission, their distribution network, we know that's all in a bad shape. And who would you sell it to? You'd have to sell it to the municipalities, and the municipalities are not in a position to pay. So we're still quite far from solving that one.
Charles, Treasury repeatedly in the budget documents said that if there is a basic income grant, it will have to be funded by tax hikes or by spending cuts. But let's face it, there's a bigger likelihood that it will hike taxes than actually cutting spending. But we've now reached a point where tax is equal to 25% of GDP. It's the highest it's been in many years. If government has to squeeze more revenue out of South Africans for this basic income grants, what are the options?
I mean, the obvious option is to increase the VAT rate again. Currently our VAT rate sits at 15%. If you look at the Africa average, it's probably close to 17.5%. And if you go beyond that and look globally, it's somewhere between 19 and 20%. So, we are behind, in terms of the current rate that is in place. There were some other interesting comments, though, around kind of, the impact of increasing taxes. So, they did talk about how, from a budgeting perspective, the increase in VAT rate, which happened in April 2018, was in fact generated a lot less income. We would have projected it at that point in time, sort of somewhere between 25 and 30 billion. They only got 20. Sort of the change in the personal tax rates. That only generated 10 billion. So while from a budgeting perspective, there's one is bullish about how much you will collect. Sort of the impact of that is the way that it rolls through the economy. It works out to be less income than you expect. At the same time, I think we are a very overtaxed nation, and especially if you look at it within the context of sort of the value that you get for your taxes, and I don't think one must lose sight of that. So what you have is quite a small population base, contributing to taxes to fund things like that. I mean, if you get an idea, there are about, from an individual perspective, about 15 million taxpayers. About half of them, just on 7.5 million of them, in fact, earn less than the tax threshold, which goes to the point as to why we need the income grant, or at least to create employment in those circumstances. And the other thing that sort of looking at the numbers, and I haven't managed to update them yet after yesterday's speech, but during the MTBS, it looked like they were projecting a 1% increase in rate in sort of the 23-24 year. I mean, if you look at that split, you say we're already sitting quite high at 24-25% of GDP. If you look at the split between those taxes, individuals have contributed about 39% of the total tax revenue. It kind of sticks at that at that level. I mean, corporates sort of traditionally it was somewhere between 16 and 17%. That comes down to 13%. I mean, the reduction in rate does that. And then VAT, that has always sat at around 25%, is going up to 29%. So, it seems to be that may be the tax that they're backing to generate that additional amount. I mean, a 1% doesn't generate enough income to that. If we're only talking about 20 or say 25 billion rand these days, and then it also creates a lot of noise in the economy simply because of the request for additional zero ratings and the impact that it has in terms of what is the basic foodstuff that should be subject to VAT at the zero rate. But if I didn't put any money on it, Elena, I would go with VAT.
I mean, but is that not the larger point, that as our personal income tax base is basically shrinking or staying constant, that South Africans will just see an ever-increasing VAT rates in the years to come?
I mean, the difference between, sort of a VAT rate increase is it gets paid by the broad population. So there's a very broad base in those circumstances. Whereas you're completely right. From an income tax perspective, while it's easy to collect pretty much, and you're also in a position where it makes a very big contribution. It's probably at the top end, and it's not going to generate much more money. If you increase the rates, all you're going to do is probably end up with a less tax take in the circumstances, because people are going to pack their bags and go and live overseas somewhere where tax rates are more reasonable.
So, you touched on this, but there was a recognition in the budget documents yesterday that taxing higher income groups is not yielding the expected amount of money. So does this mean a wealth tax is completely off the table to fund the income grant?
I mean, they didn't quite go as far as that. I mean, I would hope that is now finally the decision that has been taken. It's always been of the view that a wealth tax would be a disaster, simply because of the negative impact that it has, because the people that pay it will just stop paying it and move somewhere else. So you'll chase people away that could grow the economy, that could create jobs in the process. So there hasn't been any mention of that for a while. I mean, the other sort of acknowledgement of it that I referred to is, when they did change the rate from 40 to 45%, it generated significantly less. And I think that once you go above the 45% threshold or maximum marginal rate for individuals, the closer you get to 50, the less value people see. And I mean, there's almost a psychological threshold that they need to get over there as well. So it will definitely result in less tax revenue to in fact spend in other places.
Carol, if we can turn to the spending side of the budget, were there any budget allocations or new allocations that stood out to you?
No, nothing really new. I think something that was interesting was that a large part of the additional spending went, as I said earlier, to provinces, to health and education. And I think that that is an indication of how seriously hammered provinces have been by these budget cuts over the last 2 years. And these budget cuts, just to remind everyone, this was the attempt at to try and get South Africa's public finances back on track, to cut spending, so that we're able to cut debt, etc. And that hasn't worked out well. It's in many cases they were really being faced with this scenario where, KZN, for instance, was having to look at retrenching teachers, where they couldn't employ enough teachers, and that's not a situation we'd want to be in. So it was surprising that he did it, because I thought that we all thought that government was committed to biting the bullet on this cuts, these spending cuts, but in practice it's proved incredibly hard. And I think it's a lesson. It really demonstrates how hard it is to cut spending. Once you've got certain spending items in place and everybody's used to that and operating with that budget, to then try and cut it is incredibly hard, and has all sorts of negative consequences, never mind all sorts of upsets, all sorts of interests. So I think that's the SRD. Obviously, we were not surprised. I think that I think one of the points about the SRD is that this is the 350 grant, just to excuse the jargon. One of the points about that is that it is it's becoming permanent. It's slowly basically becoming permanent, and that is now becomes a permanent part of government spending. Now, at the moment, government's put aside 44 billion just to continue it for another 12 months, and it's going to about 10 million people. But actually, the fact of the matter is that a lot of people are actually excluded. So there are many more than 10 million people who are very poor. So in the future, it would be essential for government to incorporate those people as well, which then obviously means a higher cost.
So the budget has had a mixed response. I would say a mixed to positive response, but Fitch, which is crucial in our lives, has been quite negative. What are the objections, and do you think the reservations are fair?
Well, I think their main objection is the fact that debt is still rising, that government had this windfall opportunity, and that yes, it did use some of it to reduce future borrowing, but it also allowed these spending pressures to remain and even to build further, and that is that kind of issue of, okay, well, how do you now get out of this? So that was really their bugbear. They were saying, your spending is still rising, your debt is still rising. What are you going to do if these things don't work out well for you? And I think it's just worth noting as well is the global situation, is that the global conditions have been quite favorable for South Africa, even though we were in a pandemic. And global conditions are no longer that favorable. So we've got inflation rising, we've got global interest rates rising, which means we'll probably have domestic interest rates rising. Now, all of these things make it difficult to borrow money, and difficult to get investment, and difficult to get growth. So I think they were just warning and saying, there are so many risks, and you don't seem to have taken account of all the risks that could come to materialize.
Louise, the budget included a change in South Africa's carbon tax regime. Can you talk us through it?
Yeah, so our country implemented the carbon tax in June 2019, and I think the approach was really just to ease it in, because not everyone was focusing on reducing their carbon footprint at the time. So government hasn't been very aggressive in the approach in raising the tax rate each year since its implementation. I think this year it increased from 134 Rand per ton to 144 Rand per ton. So it's like incremental increases. And this is phase one of the carbon tax regime. And government actually decided to extend phase one by 3 years. And now that's going to end in December 2025. And having spoken to a few tax analysts, they reckon this is so that companies can just be in a better position to reduce their carbon footprint, and we could possibly see them taking things like energy efficiency initiatives and other efforts to reduce the emissions more seriously leading up to the end of phase one, because when phase two kicks in, those increases are going to be way more aggressive. And that's from 2026. So right now the aim is to sort of get the carbon tax to about $20 per ton by 2026. And in today's terms, it's around 300 Rand per ton. But then from 2026 to 2030, they're aiming to get the carbon tax rate at $30 per ton, or that's like 450 Rand per ton. So interestingly, it's some of the allowances that come with phase one, they're going to be phased out too. But government's also going to introduce a carbon budget system from January 2023. Now, this is sort of like an allowance of carbon emissions that each company has. And if you are going to exceed this carbon budget that you have, the carbon tax price you pay will be more punitive. So instead of paying 144 Rand per ton, if you exceed your carbon budget, you'll pay something like 640 Rand per ton. So I think those are just some of the main changes in terms of carbon tax.
Carol, there wasn't a single mention of government's national health insurance aspirations in the budget, apart from, moving money from the NHI budget to other health allocations. Does this mean the NHI is dead?
No, unfortunately, I don't think we can say. Well, I should say, maybe not unfortunately, but I don't think we can say it's dead. They've done this in the last few budgets, because there's been money allocated every year for the NHI for various projects that are sort of to get South Africa ready for the NHI, to prepare it and to run pilot studies and so on and so forth. And that money's never really spent by the Department of Health. So it kind of inevitably gets sort of reallocated to everyone else. In the medium-term budget policy statement, the Treasury made a very strong statement saying something to the effect of, look, this thing is not really that workable. And I think that especially in the light of, a basic income grant, and the fact that I think everyone agrees, to fund that, there has to be tax increases, whatever they are. So on top of increases, tax increases to fund the basic income grant, you would be talking about for NHI a payroll tax, which means that those people who are working are going to then be taxed even further. So I think that feeds into what was said earlier about this issue that if you tax people too much, eventually it just becomes better, easier, more worthwhile for them to avoid it or leave or something along those lines. So and I think that a lot of work has been done on this basic income grant to say, well, how would we fund it? And the expert panel that looked at it came out with the findings saying that, look, we'd have to increase taxes, but please remember that there's also an NHI lurking in the background, and we definitely can't have both. So these are These are wish lists. These are political wish lists. And actually, another point is that governments never put out a financing paper on the NHI. So even though we've been talking about the NHI for 10 years, there's never been a financing paper on how it will be paid for.
One of the other announcements, Charles, was a quite sizable boost to the employment tax incentives. Can you just quickly explain how that works, and whether, in your experience among your clients, whether there has been a significant take-up of this scheme?
Yeah, so I mean, there were big changes announced. I mean, pretty much the amount that when you're entitled to pretty much doubled, and it was given a longer lifespan as well. I mean, it's literally to encourage employers to employ people who are younger than 30. And at least to give them exposure to the job market and to gain some experience on their CV. I mean, the way that it practically works is, you still deduct PAYE from your largest or from your whole staff complement, and then you actually deduct this amount from the PAYE that you pay across. So it does have a very direct cash flow impact, and I mean it's a good incentive from that perspective. I mean the ETI has been refined quite substantially in the last little while. I think when it was introduced, it was not necessarily thought through in that much detail, simply because there were a number of employees that kind of qualified by default, in the sense that it was people that that already employed by them, that effectively now, I mean, you reduced your cost of employment because you could claim the allowance on it and get 1,500 rand back from them. So it was very significant for them, but at that point in time, we're not really convinced that it achieved the objective of increasing employment. I mean, and then there were also some smart tax people that worked out some structures around that sort of it ended up being a sharing scheme between an education institution and the employer, so that people could get some sort of qualification on it. But I mean, I don't think it. I mean, it worked in some instances, and some people were advantaged by it. But that was certainly not the spirit of the legislation, because while people got a qualification, they didn't really get a proper job, and they didn't get work experience in the circumstances. That has turned around over the last little while. So there are people that are employing people specifically to take advantage of it, and because the cost base is a little bit lower, and you do get effectively subsidized on it. I think it has resulted in a slight increase in employment, and the big increase, I think that will make a difference as well. So hopefully we've got to the point where all the teething problems are over from it now, that the legislation is clear, that all the compliance around it has been sorted out, and that it will really make a difference, and that employers will go out and look for people that meet the profile and employ them, so that they can get some proper experience and take advantage of the deduction that the law now allows them.
Charles, if I can stay with you, in the last couple of budgets, specifically the last one, a lot of money was allocated to SARS to strengthen capacity following the state capture years. What is your experience? Is SARS back where it was? And maybe the question is, to what extent do the strong revenue numbers we saw this year reflect a stronger SARS?
Yes, I mean, I think the stronger revenue numbers is probably made up of three different things, and you've mentioned two of them. I mean, being the sort of the commodities boom and sort of a more buoyant economy. I mean, there was more activity than expected, so that had an impact. But there is no doubt that SARS is turning around. It's turning around quite quickly, and simply as a result of their sort of high level of activity. I mean, we have seen they must also get credit for some of the increased revenue that was collected. There was a statement in the in chapter 4, I think yesterday, that said, in the last year, SARS has employed an additional 430 people, and they've also spent a significant amount of money on computer infrastructure. And I think that we've seen that there was a change to the way that e-filing operated. And there's still some way to go, and I mean there was still there is still an allocation to them, and they're starting another recruitment drive. In the next financial year, as well, as I understand it. So I think that that they are getting geared up. I mean, it's taken Commissioner Kisvetter a little bit longer than I think he thought it would, in terms of getting it back on track, to get it back to the organisation that we had in the early 2000s. But we're certainly seeing a big increase in activity. There are still some challenges. From a compliance perspective, from days that don't get calculated properly, etc. So that SARS still needs to invest in that, but they definitely on the up. And I think that's positive for the country, and will sort of have a positive impact on tax morality.
Just on that revenue question, I mean, it's maybe, Carol, a bit of an unfair question to ask you, but so much is dependent on strong revenue and keeping these numbers up. Treasury itself is expecting a bit of a dip in revenue in the next year, and this is because of the commodity boom that could be subsiding. What is your view on the revenue side? Do you think it will be maintained? How big is the risk that next year we'll have a large fall in revenue, which will have a significant impact on our debt situation?
Well, the risk is large. Whether the risk materializes or not, I don't know. And, economists are quite sharply divided on this as to whether Treasury's revenue targets were realistic or not realistic. So you've got a group of economists saying, even though they have assumed that revenue is going to drop next year, there's going to be a fall in revenue compared to this year, they still believe that was not enough, or that government has taken on too much spending because of that risk. Now, nobody knows if the risk will materialize. The risk is really linked to how you think, whether you think China is going to slow down or whether you think China is not going to slow down, and how bearish or bullish you are on China. So if you think China is slowing down, then you're going to say, well, export, commodity prices are going to slow down, are going to fall, and therefore our revenue is going to fall. So it's very, very very unknown. And then you've got another group of economists who are saying, well, look, I think their revenue estimates are actually fine, and even a little bit conservative, and we think that they've done the right thing in being conservative. We won't know. This is the problem. We won't know until we've had next year and the year after. And I think that the bigger point is that because the risk is there, maybe they should have thought of well, what can we do to kind of hedge ourselves against that risk? And they didn't do that. So it's highly debatable, and it goes into people who've got it's all of your assumptions and what your model tells you when you put all of those assumptions into your model.
I guess that brings us back to growth, right? So, that's the one thing that we need. Charles, is there anything a Minister of Finance can do in a budget to encourage growth?
I think that there are things that they can do, and the budget is, I think sets the tone and sets the policy direction. And what we've seen in the last little while is very much sort of tweaking on technical adjustments in respect of the Income Tax Act. And for a number of years we've had these comments that we'll make it easier for people to register and to do their compliance. And we never really get over that. It becomes a little bit easier, but that doesn't make it easy for a foreign company to in fact invest and come and register and do business here. If a brave minister could give incentives to business to invest here, could cut tax rates on the basis that economic activity, if they're building a factory here, if they helping in putting infrastructure in place and becoming a big employer of people. If you had specific incentives for that would certainly stimulate growth. And we mentioned just now that the tax rate. What advantage is there to come and invest in South Africa at a tax rate of 27% if you could be paying 22% somewhere else, and then potentially we're far away from major markets. So there are issues in terms of, or costs at least in terms of transport. So we need a very strong showing on a favourable business budget, and I think that would help business confidence, and it would help people to invest and even to expand their existing operations. I think there is something that he could do with a very strong business orientated message.
So on the corporate income tax, government lowered it by a percentage point, but it's going to be income neutral because of two changes to company tax. Can you just talk us through what those changes entail?
Yes, so effectively, last year they announced the reduction in rate, and then when we got into the debate with National Treasury on exactly what the legislation looked like, then it started to becoming, a slightly different environment, and it was at that point in time that we really understood what tax neutral meant. So the way that they've achieved that, currently under the existing provisions, if you have a tax loss, then and you make income in a particular year, then you set that off against your tax loss, and you don't pay any tax in the circumstances. What they've now done, subject to some de minimis rules, is that you're only entitled to use 80% of your tax loss in a particular year. So that doesn't mean that you lose the loss. It just gets transferred to a future year. So the effect of that is that tax or cash tax will be collected as a result of that. On exactly the same basis, they've limited the interest deduction, so you will still get your interest deduction over time, but because there's a limitation in the amount that you could claim, what in fact happens is that you could end up paying tax even though you haven't fully utilized the deduction of interest or set it off against assessed losses that you've created or generated in prior years. So it's a little bit of a timing thing. It brings it forward. It brings revenue forward from Treasury's perspective, and sort of has a cash flow impact for taxpayers as opposed to a real cost. But it does mean that cash flows in those circumstances, so more tax is collected.
Carol, Tito Mboweni was a big fan of zero-based budgeting. That seemed to have disappeared in this budget. Can you just explain to us what that is and whether you still see it playing any role in budgets going forward?
Well, he wasn't a big enough fan to actually implement it, but he did talk about it. What it means is that you basically go back to zero. So the way budgeting happens now in most organizations is that, you look at last year's budget and then you add some more for inflation or whatever, or you take some away here, add some there, and then you basically build the budget from there. And then what happens then is obviously you've got these built-in costs that are maybe actually not really what you want to spend your money on. And so Zero-based budgeting is sort of going back to scratch and sort of say, okay, let's look at what we really want to do and then how much it's going to cost. It's a massive, massive exercise, and it would be great if South Africa did it, because there is just such a lot of duplication and waste in the budget system, in the government system. All of those hundreds of state-owned enterprises that we've got. They're all getting money of some kind, even if it's just board, payments for all their board members or their CEOs or whatever. So those things are all adding up. Those costs are adding up. So it would be good to sort of have a fresh go at it. But because, once again, there are these vested interests, people don't want you to come in and slash their budget or poke around and say, well, you don't really need this. Let me take it away. And people don't want that. So it's going to be a hard thing to persuade people to do.
Right, so maybe my closing question to all of you will be in that same vein, is how the Godongwana era will differ from the Mboweni era. Carol, do you have any thoughts on that?
Yeah, I think he's, notwithstanding the sort of criticisms that I've put forward about the budget, I think that he is a doer. He's a real doer, and he's not going to be the finance minister who just sits around and lets things, roll over. And the fact that even though he put nothing in the budget about wages, he wants to tackle this thing and solve it once and for all. Same with Eskom. He wants to tackle it and solve it once for all. So that's very good. We know that Tito Mboweni was not a doer. In fact, Tito Mboweni was not even good at appointing people. So he had half the treasury, in acting positions, and half, and many vacancies. Now, Godongwana moved in there, and he's just appointed people. These positions are being filled. So I think it's going to be different in that we've got a finance minister who's much more engaged and much more committed to doing things. In terms of what he can do, well, I mean, that a lot depends on the economy and how things develop.
Amis, any thoughts?
I was actually quite relieved to see a budget where there was no reference to aloes or proteas. There wasn't any funny metaphor that was pretentious. And I think, building on to what Carol said, I think he is a doer. And I don't know, maybe because it's not an election year, he seems to let Treasury do their job. And from what I'm gathering, it seems like he's very neutral, not, coming to turn over the apple cart. I think he trusts Treasury to do what they're supposed to. And so I'm quite keen to see if this is just this year's thing, or if this is a consistent thing about him that plays out in years to come.
Charles?
Yeah, the style to me was a little bit different. So almost picking up on Lamar's point as well. I mean, he went off script way more than any other minister's ever gone off script. So he was, and so it was maybe from that perspective, less poetic than it was in the past, and more hands-on. And I think if we can have a minister who's hands-on and who addresses things, that can only be good for us.
Well, that brings us to the end of today's session. And thank you to Charles, Lamise, and Carol, and to all of you who joined us today. Goodbye.
Goodbye.